Hello, everybody. It's Mark Johnson at Guaranteed Rate, and today's market update is brought to you by Date the Rate and Buy the House. So I'm going to explain why buying a house today is better than it will be in 6 months to a year from now. But first of all, let's go ahead and look at us and see where rates are right now. It looks like that interest rates have gone up for the last several weeks. And today, the average interest rate, well, as of last Thursday anyway, overall, the rate has been 6.9%. Now, that's over the whole country. So here in Utah, we might have a little bit lower rates. My rates are a little bit lower, especially if you've got really good credit and a good down payment. But let's just take a look at the charts here. So the charts are showing that if you look at this, you'll see that this is the bond market, and this is where we buy our money. And you can see that for the last 10, 15 days, it has just been flat. There's really not been a lot of information coming out to help us with interest rates as far as the economy is concerned, because that's what interest rates are looking at the most right now. And then today, you see the bond market went down, which means that rates have gone up. Let me just show you this. This is the 10-year treasuries, and you can see that they've kind of been up and down a little bit because they don't follow the bond market that we buy mortgages from. But you'll notice today the 10-year treasury just went up quite a bit in just one day here. And the reason is because there's still a lot of good economic numbers that are showing up, showing that the economy is strong and that unemployment is still being low. Now, that can change, and we're hoping that it will. But because of these factors, the Federal Reserve probably will only lower interest rates by a quarter, maybe twice, so maybe 0.5%. Hopefully, that'll be a little bit different, and I kind of have a feeling that it might be, and I'll have that update later on this week, maybe by Friday or Thursday. So let's just kind of look at what it would mean for you if you were to buy the rate, if you would buy to the house today and date the rate. So I guess it's marry the home. Anyway, here's a really great example by my friends at MBS Highway and Barry Habib and Dan Habib here. They put this together, and it's absolutely spot on. So for every 1% drop in interest rates, about 5 million more eligible buyers are going to be out looking for homes. Now, we saw that last September when we saw that home sales were up higher than they've been since I think July of 2021, and that is because interest rates got down to below 6%, somewhere in the 5.6, 5.75% range there. So right now, higher interest rates are a buyer's best friend, because the higher the rate goes, the fewer people are going to be able to qualify or even be willing to take on that additional debt that is going to cost them with a higher rate. But I'm going to show you how you can actually benefit from that in the long run. So tight inventory becomes tighter when interest rates come down, and leads to less choices because there's not going to be as many homes on the market for you. And so the other problem is that there's going to be some upward pressure on pricing because there's going to be more demand for the fewer homes that are on the market. So let's take a look at this. If property values today, if you bought a house for $700,000, right, and your loan amount was $560,000, and you got a rate of 6.875, your monthly expense on this would be about $5,000 for principal and interest. If you take that same house and you wait 1 year, and we just be conservative at 4.1%, actually it's going to be closer between 4.5% to 5% is what everybody's saying. You're going to see that interest rate or the value of that home is going to go from $700,000 to $728,000. Now, the loan amount, you'll just getting the same percentage, that'll go up from $560 to $582, so it'll be another $22,000 you're going to finance. Today's rate is $687, and that, again, that is going to be $5,075. If you're looking at the $582 next year, and we kind of predict that interest rates are going to be below 6%, not for very long, but hopefully maybe a little bit longer than what I anticipated. So at 5.875, that payment is going to be $4,893. So you're only saving a difference of $182 a month. if you were to wait until next year. Now, let's go ahead and look at the cumulative monthly payment difference that we're showing versus waiting. So in other words, you're going to pay an extra $2,184. And then let's look at the cost of refinancing. Typical refinancing cost is going to be somewhere between $3,500. It could be a little bit lower, a little bit higher, depending on several different factors. But let's just say that the total cost, if you wait 1 year to buy, if you buy now and you refinance in 1 year, that total cost is going to be $5,684. Now, on the other side, your appreciation at 4.1% is going to be $28,700. And then if you minus out the payment difference and then the cost to refinance of $3,500, you're going to see that you're going to still benefit by buying now $23,000 versus if you wait until next year when rates come down. So the housing market basically, has it was stronger in September in sales, but that's come down since then. And now we're kind of back to where we were during the summertime when rates, were again above in the upper 6% range. Now, when we talk about buying a home today, it might be a little bit scary for you, and interest rates haven't come down as quickly as we would have liked to see. But there's a lot of factors that are out there that will help us when it comes to interest rates next year. You're going to see higher unemployment because there's a lot of companies that are closing down stores for retail centers, and there's a little bit of weakness a lot in the job market because employers have been slow to let people go because how do you let good people go if you're thinking that maybe things are going to become a little bit better down the road. So my advice to you is to buy now because there's lots of homes. And even if you don't buy now, you should get pre-approved now and start looking for homes because you never know when the right home is going to come on the market. And then at that point in time, we can look at the pros and cons for your particular situation to see if it's better to maybe buy down the rate, do a 3-2-1 buy down or a 2-1 buy down, have the seller pay your closing costs or buy down costs just to get you into that home at a comfortable payment. And then in a year or so, we can look at refinancing that home. In the meantime, you're growing equity. Anyway, that's my thought for today. Have a great week, and we will talk to you soon. Thanks.